All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Tuesday, everybody. Today's January 28th, 2025. The top story this morning is this little bitty bounce that we're getting in tech stocks. Some might even call this a dead cat bounce. Obviously, the market is still reeling from whatever that was yesterday, the panic brought about by the unveiling of DeepSeek and the resetting of expectations for some rather ridiculous earnings, some rather ridiculous numbers that have come out of AI stocks. Now, look, I don't know if this bounce is going to last. Like NVIDIA is the name yesterday. NVIDIA lost something like 17% yesterday, the largest single stock market cap loss in history. NVIDIA yesterday, 562.2. I'm sorry, wrong number. $595 billion in market cap was wiped out with NVIDIA yesterday. Just that one stock. That's the largest loss in history for any company. That is bigger than the market cap of United Health, bigger than the entire market cap of ExxonMobil, bigger than the entire market cap of Oracle. In fact, there's only, outside of NVIDIA, there's only 12 other companies in the country that have a market cap bigger than the amount of money that NVIDIA lost yesterday by themselves. That is what a bludgeoning the market gave that company yesterday. Now, I don't know if this bounce is going to last. It was up like 2% this morning following that big loss yesterday. It's looking pretty weak, this bounce. I don't know if the buyers are going to come in, but you know what? The buyers came in yesterday. They came in quite a lot. I mean, look, they were out in force. The analysts were releasing notes yesterday trying to gin up exit liquidity. They're like, oh, you know, this breakthrough in technology that reduces demand for NVIDIA's product by 95% is actually bullish for NVIDIA when you really think about it. And these are highly paid, apparently very talented, educated, knowledgeable people coming up with this crap. Do you hear what you guys are saying? That this is good for NVIDIA? I mean, imagine somebody invents a car engine that gets 700 miles to the gallon, and then some guy comes out and says, this is bullish for ExxonMobil. Does that make sense? This is bullish for Chevron. This is great for oil stocks. No, it's not. It just made your product 95% obsolete. Maybe obsolete's not the word. 95% less necessary. And they're out trying to spin this as bullish. Bloomberg, CNBC is like, oh, traders eye dip buying opportunities. They're like, yeah, our puppet masters called and they need exit liquidity. So let's trot out this parade of imbeciles to try to convince retail buyers to buy this stock so we can get our money out before it really crashes. And boy, howdy, did it work. Retail investors bought more NVIDIA stock than any point in history yesterday. All right, the dip buyers bought $562.2 million of NVIDIA stock yesterday, sold to them by institutional money, because you better believe that while they were sending their analysts out to convince you to buy, they were selling. Oh, yeah, they were selling yesterday. The largest pile into NVIDIA stock among retail only yesterday. So let me ask you this. Let's say retail finally gets exhausted. Let's say retail decides to take a break and they stop piling into NVIDIA stock. Then where does the bid come from for that one? Oh, look out below if it ever comes to that. You better believe that would be a bludgeoning. But for now, retail is buying the dip because they're being told to. Everybody's out there talking about Jevons paradox. Oh, yeah, when you really think about it, this is bullish. Sven Heinrich at Northman Trader on Twitter had a hilarious post yesterday. He said, every sell-side analyst in the world right now is trying to explain to you why the thing they didn't see coming doesn't really matter. And, well, that just pretty much summed up yesterday in a nutshell. Now, also going on this morning, we got GM earnings. I'll be honest with you, GM earnings, this is the second quarter in a row. They were surprisingly strong. Keep in mind the backdrop, guys. The auto industry has been a mess this year. Car sales are plummeting, and yet GM just posted full-year sales that were up 9.1%. I can't look to some program or some model or something GM is doing differently than all the other automakers to explain what's going on, but whatever it is working. They guided for stronger sales for 2025, earnings per share of $11 to $12 for 2025 versus $10.60 expected by analysts. Remarkable numbers by GM here this morning. Now, on top of that, we also got durable goods orders that makes it even more surprising what GM was able to pull off. Durable goods were down 2.2% month over month for December. Now, durable goods ex transportation, which means we strip out cars, we strip out planes, they were actually positive by 0.3% month over month. That means pretty much everything else is selling right along the same lines of what it was selling before, but transportation equipment was down big, dragged the whole market lower. Now, if you think about this holistically, with everything going on with Boeing, they're actually ramping up from the strike that ended late in the fourth quarter. So it's not planes. When you look at transportation equipment, it's definitely not planes that's dragging things down month over month. It's got to be cars. It's got to be automotive. And so, again, it's very surprising to see GM doing so well amid a backdrop like that. Outside of GM, the auto industry is in really big trouble, and the auto finance industry is in really big trouble. My buddies over at MacroEdge were talking the other day about how the number of people Googling, how do I give back my car, is at an all-time high. When people are like Googling, I don't want my car anymore, the payment is more than this dang thing is worth, I don't think that's bullish for the people who loaned them the money to buy that car. I'm just going to go out on a limb and say that. Also, speaking of Boeing, we were talking about a second ago, Boeing just posted their biggest annual loss since 2020. They lost $11.83 billion in 2024. Let's compare that to a loss of $2.24 billion in 2023. Boeing has not been profitable since 2018. Now, of course, no big surprises there. Boeing losing money, that blowout on the panel on the 737 MAX, also the big strike. Not surprising to see Boeing in trouble. They really got to turn that company around at some point. I mean, look, they raised a lot of cash. They sold a lot of stock, took out a lot of debt. So they can afford that cash burn for now. But it's been 6 years since they turned a profit. Sooner or later, they're going to have to make some money over at Boeing or figure something out. I don't know what they're going to do to turn that ship around, because that is a very big ship with a lot of inertia. And big ships like that don't turn so easily. Also, we got some news out of D.C. this morning. President Trump has just signed an executive order that, effective immediately, halts all federal grants and loans for everything outside of, they're saying, Medicaid, Social Security, and individual assistance. Now, there's some debate going on in the media about what that individual assistance means and what about when it's routed through state programs versus direct from the federal government. But really what this program is targeting is specifically foreign aid, NGOs, DEI, and climate initiatives. So they are halting everything. Get ready for a wave of headlines about, oh my God, they're cutting this program and it's so important to our community and this and that. Look, I am sure some of these grants are very important, and I am sure there are some people out there that these grants help a lot. And there's probably jobs that are dependent on a lot of these grants. The government spends, what's it like, $7 trillion a year or something now the government spends? Yeah, I'm sure a lot of people are depending on that $7 trillion. But we can't afford it. We don't have $7 trillion. I mean, we're speaking very rudimentary here, right? We're taking a very high-level approach to this one. We're broke. We got to spend less money, and that's going to hurt some people. And we're going to find out if we actually have the stomach for this very soon, because you better believe there is going to be a parade of stories by our ever, independent and non-partial press highlighting all the pain that budget cuts are causing, assuming we ever actually cut the budget. I'm not even sure they're ever going to do it, to be honest with you. I think when the dust settles from all this and all the stupid stories, we're going to end up with spending more money than we did a year ago. I'd love to be proven wrong. Call me skeptical. So that's going on this morning. We've also got U.S. ships are returning to the Red Sea. The Houthis have agreed to stop lobbing missiles and missiles and drones at civilian shipping. Isn't that nice of them to, not murder sailors as they're passing through the Red Sea? And so the U.S. ships are finally starting to return. Still, a lot of the big carriers like Maersk have been hesitant to commit to doing this. They're collecting higher fees, sailing around Africa, and there's still questions about insurance. But for now, the missiles are not flying in the Red Sea. Let's take that for the win that it looks like. And last but not least, we got earnings from Lockheed Martin this morning. Now, this was pretty interesting, and there's very scant details about this, but Lockheed Martin just posted a huge miss. They posted earnings per share of about $2.20 versus expectations for more than $7 in earnings. Now, we don't know what it is. The only nuance we got is that Lockheed Martin took a loss of about $1.7 billion on classified programs. I have an idea what that might be, but I don't know for sure. But a big miss among our biggest defense contractor there. That stock is taking a bludgeoning this morning. You know what? Why don't we shrink my big melon of a head and let's see what's going on in the market, shall we? And while we're doing that, don't forget that like button. Don't forget that subscribe button if you're new here. Come on back because we do this one every morning. Right now, the S&P 500. Oh, look at the size of that bounce. 9 whole points, 0.15% higher after the bloodbath yesterday. Yeah, guys, I am leaning towards dead cat here. Something tells me this DeepSeek sell-off has not fully run its course. There's other people that are in agreement elsewhere in the market. We'll get to that in a second. The Dow is down 7 points or 0.02%. The Dow actually closed up a few hundred points yesterday. We had some strong secular rotation out of the high-flying tech names and into the value stocks where you find those in the Dow. And so the Dow actually had a pretty good day yesterday, and it's holding those gains essentially unchanged here this morning. The NASDAQ, meanwhile, wow, 27 points after losing over 600 points yesterday. That is the bounce that we get in the NASDAQ. Okay, now it's up 31 points, 0.15% higher. Again, guys, I am going with a dead cat this morning. Meanwhile, the U.S. dollar index is at 107.91. That is 57 basis points higher here, about 0.5%. Little bit of a stronger dollar this morning. Looking over at the bond market, we got yields are recovering a little bit after yesterday's flight to safety. The 30-year Treasury is at 4.802. That's 3 points higher. Remember, guys, yields going higher. That's bond prices going lower. The 10-year, 4.561. That is 3.3 basis points lower. The 2 years, the 10-year is 3.3 basis points higher. I got this dyslexia thing going this morning. Forgive me. The 2-year, 4.220. That is about 2 basis points higher. And the 1 month, 4.333, essentially unchanged. Looking over at the commodities board, we got spot gold is higher by about $10, still hanging out around $27.50, just a couple of dollars shy of an all-time high. It's 1/3% higher this morning. And my favorite of the shiny, spot silver, $30.18. That's down a couple of pennies or 0.12% lower. We've got coppers up 0.86%. Platinum is down 0.8%. Palladium down about 0.6%. And West Texas Intermediate crude oil, $74.17. That's higher by $1 this morning or 1.33%. And we've got Bitcoin is actually holding up surprisingly well here. It was down yesterday and it's down a little bit more this morning, but we're sitting here around 102,000 as priced on Coinbase. Considering yesterday we went as low as 97,700. And given the typical correlation of Bitcoin with tech stocks, it's not a perfect correlation, but they tend to move in unison, at least directionally. Bitcoin held up very well yesterday, still holding above 100,000. Watch that key level. We recaptured the 50-day moving average after briefly trading below that one. All right, let's talk a little bit about what's going on this morning here. Let's start with the tech stocks we have to. NVIDIA is rebounding after the biggest market cap loss in history. But it is a fragile bounce, and that is putting it mildly. NVIDIA shares traded higher in pre-market Tuesday as traders reassessed the implications of a much cheaper to build large language model for the artificial intelligence trade. The chip maker's rebound in the early session was shaky, with it up about 2.2%. The stock's bounce was much bigger earlier in the morning and was reducing as the official market open neared. The stock plunged 17% on Monday and slashed more than $595 billion from the company's valuation, the biggest single-day market cap decline on record. And, well, we just can't have that because institutional money just loves their AI bubble, and they needed exit liquidity yesterday. So I took this screen grab here from Bloomberg. You could see, man, they were marching out their parade of imbeciles yesterday. NVIDIA's plunge has traders eyeing when to buy the dip. All right. I mean, they were like superliminal messaging yesterday, convincing you, please go buy NVIDIA. Blackstone, BlackRock, Apollo, all these big firms out to KKR, they need to get out. So quick, convince retail traders to pile in, run the headlines on Bloomberg. And, well, it worked. Look at this one in Reuters. Shout out to my friend Melody Wright, who sent me this one this morning. Retail investors bought record amount of NVIDIA stock in DeepSeek route. Now, keep this in mind, guys. Retail bought a record amount, even though it was the single largest decline of market cap in history. That means if you bought yesterday, you were exit liquidity for institutional money, period, hard stop, end of conversation. There is no debating about it. You got played if you bought this yesterday. Retail investors bought a record amount of NVIDIA stock on Monday after concerns over a low-cost artificial intelligence model from Chinese startup DeepSeek stripped 17% off its shares, or $593 billion in market value. Data from Vanda Research shows retail purchases of NVIDIA shares totaled $562.2 million on Monday, the largest amount on record going back to 2014. Now, NVIDIA stock this morning, it's still up 2.5%. It's clinging to the last little bit of this dead cat bounce here. We'll see what it does today. It's trading at $121.41. Now, look, let's also put this in perspective. If we adjust this for the 10-for-1 split, it's still trading at about $1,100 versus, when we first started covering this on this channel, it was trading around $500. So this stock is still more than doubled in the last year and a half, even after the biggest single-day loss in history. But that also means that this thing could still go a hell of a lot lower. If you think there's somehow a downside limit and yesterday's sell-off was it was all overblown. Well, Nassim Taleb begs to differ. Black Swan's Taleb warns NVIDIA rout is a hint of what's to come. The author says a drawdown of 2 or 3 times bigger than Monday is possible. Just a reminder, guys, 3 times bigger than what happened yesterday would be $1.5 trillion of market cap. Yeah. And he's saying that's possible. The Black Swan author Nassim Taleb is warning that Monday's brutal sell-off in NVIDIA is just a taste of what's in store for investors who blindly piled into Wall Street's AI-driven stock rally. Now, let's pause for a minute and just take stock of the fact that Bloomberg is using language like investors who blindly piled into the AI-driven rally. All right. That is some very strong language. I've been saying that for over a year. Nobody has any idea what they're buying. They're finally admitting here future pullbacks could be 2 or even 3 times bigger than the 17% slump posted by NVIDIA at the start of the week. Taleb said on the sidelines of what's become known as hedge fund week in Miami, the drop wiped out $589 billion from the chip's valuation, making it the worst in market history. This is the beginning, Taleb told Bloomberg News in an interview after the close of markets on Monday, the beginning of an adjustment of people to reality, because now they realize now it's no longer flawless. You have a little chip on the glass. Taleb said too many investors have been bidding up prices of firms related to AI without properly knowing the details of how it functions or is going to succeed. He described technology firms as gray swans because investors underestimate the deviations in their prices that are possible in a day. Does that sound like a sell-off that's done to you? That's a pretty strong language. 3 times what we saw yesterday? Yikes. You better hope yesterday was the worst of it. All right, let's shift gears a little bit here to GM. GM's annual forecast tops estimates amid a boost from U.S. and China. Surprisingly good results here from General Motors. General Motors has unveiled a stronger than anticipated forecast for its 2025 earnings, fueled by strength in its home U.S. market and steps to bolster its operations in China. The car maker said it expects to report adjusted earnings per share of $11 to $12 for the year, topping Bloomberg's consensus estimates for an outlook of $10.60. Let's scroll down a little bit here. GM had previously said that it was benefiting from resilient consumer demand for its trucks and sport utility vehicles, despite possible headwinds from relatively elevated interest rates. And that's putting it mildly, guys. The whole auto industry is in decline right now. GM stands out. They're really doing well here. And it's got me scratching my head. Look at what's going on at Nissan and how they're just struggling on life support over at that company, and contrast it with this one. For the 2024 fiscal year, the company posted adjusted earnings before interest and taxes of $14.9 billion. That's at the top end of its previously improved outlook of $14 to $15 billion. Full year sales jumped 9.1% to $187.4 billion, with Barra highlighting GM's U.S. overall deliveries and a push to distance ourselves from the auto industry's pricing, incentive, and inventory pressures. And whatever they're doing to distance themselves from those things, it's working. Great numbers from GM here. Now, the stock not necessarily reacting so well to it because there's been a lot of positivity in the stock. GM right now down 4.8% here. So I guess the market was largely pricing this in, down 5% now. Not sure where the sell-off is coming from here. I was really surprised by this, but this is a 1-year chart of GM, and General Motors stock is up 56% over the last 12 months. So I guess when you view it through the lens of the rally this stock has made while the overall industry has declined, I guess a 5% sell-off doesn't look so bad. Now, we also got some data this morning that shows you just how bad the auto industry really is. United States durable goods orders came out this morning, and they are down 2.2% for the month of December 2024 versus the previous month. Pretty sharp decline in durable goods. Here you can see below zero. That is the second month in a row of 2% declines in durable goods. Now, let's contrast that 2% overall decline with this number, durable goods ex transport. So when we don't count cars and we don't count planes and trains, there's John Candy for you and Steve Martin. Durable goods ex transportation in the United States increased by 0.3% in December from a negative 0.1% in November. So durable goods, when you don't count transportation, were positive, which means all of this negativity was driven by transportation equipment. And again, when we think about this, with Boeing on the rise because they're coming out of the strike, so plane on a month-over-month basis, plane fabrication is going up. That means it's probably coming from cars. And it goes to show you just how bad the auto industry is here, guys. Keep an eye on those car companies. Keep an eye on names like Carvana, names like Ally Financial. The auto finance industry is in big trouble here. I think they're avoiding price discovery by hiding this stuff on the books of people's pensions. I could be wrong about that, but I suspect that's been going on for some time now. Now let's talk about Boeing, another one that's been in pretty big trouble here, although hopefully the worst is behind them. Boeing posts largest annual loss since 2020. Boeing has reported its biggest annual loss since 2020 and negative adjusted free cash flow of $4.1 billion for the fourth quarter as the embattled plane maker grapples with the fallout from a prolonged machinist strike, charges from U.S. government projects, and expenses linked to a slew of job cuts. Analysts had anticipated negative adjusted free cash flow of $4.17 billion. Now, Boeing has faced both increased scrutiny over its safety record and the impact of the COVID-19 pandemic in recent years. No, you're not going to COVID your way out of this one, Boeing. Sorry. While 2024 began with a dangerous midair panel blowout on one of its 737 MAX planes. There we go. Yeah. Was it COVID, or you think maybe it's the fact that pieces of your plane fell off? I'm going to go with pieces of the plane falling off. The incident, coupled with a now resolved work stoppage by over 33,000 workers, weighed on the firm last year. Overall net losses for 2024 came in at $11.83 billion, deepening from the loss of $2.25 billion in the prior year. That is a lot of cash Boeing burned through. $4.1 billion in just the fourth quarter, $11.8 billion for the year. That's versus $2.25 billion the year earlier. And a reminder, Boeing not turned a profit since 2018. That stock this morning, pretty much taking this one in stride, is down about 0.33%, $174.61, down about 55 cents. Now we got this one in Newsweek, and I just got to warn you guys, you are going to see some hysteria in the press here. Trump pauses federal grants and loans taking effect today. And this is in Newsweek here. The White House Budget Office has ordered a temporary freeze on all federal grants and loans, a move that could impact trillions in government spending and halt public programs. The pause, set to begin Tuesday at 5 p.m., excludes Social Security, Medicare, and direct individual assistance. The freeze aims to allow the administration to align federal spending with President Donald Trump's priorities. It affects financial assistance for foreign aid, NGOs, DEI, and climate initiatives, among other programs. Exceptions may be granted on a case-by-case basis per the Office of Management and Budget memo. Congressional leaders have expressed strong opposition, you don't say, citing devastating consequences for communities nationwide. Trump has signed a raft of executive orders since entering office on January 20th. Now, look, guys, I'm sure there's a lot of crap in here. I'm sure there's a lot of BS that there's no reason for the government to be funding. And I'm sure there's a lot of programs in here that do legitimate good and that people actually rely on. Here's the thing. We cannot solve our federal spending problem in a painless fashion. All right. Anybody who's out there acting like, oh, if we just tax the rich, or, oh, if we just stop funding unicorns and rainbows, everything will be fine. The problem is too big. It's bigger than the problem may be unsolvable. I mean, politically, it already appears unsolvable. But let's be honest here, guys. There is no way out of this without hurting a lot of people. All right. It just cannot be done. And so if we finally start cutting spending, and the first thing we do with the first $1 million we cut is we parade out all the people it hurts and say, oh my God, how could we do this? Never again. Then we are never going to solve this problem. And long-term, the cumulative pain is going to be even worse. So look, if we're starting with DEI initiatives and climate change and foreign aid, that's great. I agree. I don't think the federal government should be paying for these things. It's not going to be enough, guys. If we don't address the real reason for this, i.e. defense spending is out of control, Social Security, Medicare, Medicaid, if all of these things that we're acting like are off limits, which are the biggest line items in the budget, if we don't cut them, we're never going to fix this problem. And of course, no politician is going to stand up in Congress and say, I think we should cut Social Security benefits, because that is a non-starter. That person will be voted out of office in the very next election. So I remain very skeptical that these spending cuts will ever happen. They need to, but I'm skeptical. And speaking of bloated defense budgets, take a look at this one. Lockheed Martin stock slips as earnings fall short of estimates. Scant details in here, but the numbers are pretty impressive. Lockheed Martin stock fell 3.5% early Tuesday after the aerospace and defense company's fourth quarter earnings fell short of estimates as it booked losses on classified programs. The Bethesda, Maryland-based Lockheed had per-share earnings of $2.22 in the quarter, down from $7.58 a share in the year earlier period. That is a huge drop from $7.58 down to $2.22. It was weighed down by $1.7 billion of losses for classified programs. Sales fell to $18.6 billion from $18.9. The consensus was for earnings per share of $6.62 and sales of $18.8. Lockheed Martin stock is down about 3.5% here, holding up pretty well considering what a big miss that was, $486.28. And if you don't mind, guys, we are going to don the tinfoil hat here. What do you think these classified programs are that the Lockheed Martin lost $1.7 billion? Wrong answers only. Let me know in the comments. What was the classified programs that they cut that result in those big losses? Have some fun with that one. Maybe I'll read the funniest one on the live stream tomorrow. By the way, guys, realistically speaking, I think I know what this is. I think this came from the NGAD or the NGAD, Next Generation Air Dominance Fighter. It was this big sixth generation fighter that was supposed to be like rushed into production and be available by 2030, ostensibly to, have air dominance over the South China Sea in a hypothetical, hopefully not inevitable conflict with China. That program was basically cut in the fourth quarter. I think that's why, because any big fighter plane, Lockheed Martin Skunk Works is probably all over that one. So I don't know that for sure, but that's what I think is causing those big losses at Lockheed. And last but not least, guys, U.S. and U.K. ships return to the Red Sea after the Houthis vow to hold their fire. This one, it's been a long time coming, since like October. The Navy has been escorting ships. Most have been sailing around Africa. There was this big peace deal in Gaza between the Israel and Hamas. And so hopefully the Houthis are done shooting drones and missiles at commercial shipping. They say they're done. And it looks like the first U.S. ships are there, actually. They're saying here 6 ships linked to the U.S. and the U.K. have successfully transited the area without coming under attack since January 19th, when the Houthis said they would stop targeting vessels associated with those countries. That's according to the Joint Maritime Information Center, which collates information on the militants' attacks from multiple navies. So it looks like we are through the worst of that in the Red Sea. Maybe commercial shipping will get a little bit cheaper now. And I just want to say thank you very much to Pandemonium Paladin. Thank you, sir, for being a Melonhead member for 4 months. He said NVIDIA has pissed on gamers, so they won't help. It's funny you should mention NVIDIA and gamers, all right? Because one of the takeaways when you really think about this DeepSeek thing, and I've been giving this a lot of thought over the last few days, besides the fact that DeepSeek's training budget was so low, and a lot of people remain very skeptical of that low training budget, it looks like it's at least mostly legitimate, all right? There may be other costs that they're not communicating. That $6 million number is probably a lot higher than that when you factor in labor and research and R&D, all that other stuff. But the big thing is that it runs locally. That's what's really impressive about this DeepSeek thing. It doesn't need a data center. You can run DeepSeek on a single like retail level gaming GPU. A high-end PC or a high-end smartphone can run DeepSeek, unlike a lot of these other AI apps where you send the task out to a data center, it's performed at the data center, and then it's sent back to your device. DeepSeek runs locally. Now, I'm sure they're harvesting information about the user. You're probably tracking keystrokes and stuff like that along the way. But one thing that may actually benefit from DeepSeek, it could be very good for consumer hardware sales. You could see more PCs, more laptops, more high-end smartphones selling, and maybe those sales could actually rise to replace some of this big data center revenue that's going to go away for these big semiconductor names. I don't know if that is definitely going to work out that way, but it could. It's a possible silver lining. And I'm thinking in particular of this, what's the new one? The new Blackwell, the 5090 or whatever it is that they just came out. NVIDIA just announced a Blackwell gaming GPU. And I think that gaming GPU may actually be one of the ideal products to run something like a DeepSeek. I don't know that for a fact, but I've seen a lot of analysts are hypothesizing that we could see consumer electronics actually get a boost from this breakthrough, of course, at the expense of the data center build out, which will be brutal for the names that have really soared over the last few years. Thank you very much, Pandemonium Paladin, sir, for supporting the channel as a Melonhead member. And thank you to Steve Woitis, who says, unfortunately, perpetual government grants create organizations that just depend on getting grants and not really creating or producing anything useful. I agree in principle with that. I'm sure there are some grants that are doing legitimate work. I'm sure there are some NGOs. I mean, there's going to be programs like just randomly thinking, right? Like a battered women's shelter. You're going to find a lot of those get funding through federal grant programs, right? And if that funding goes away, it's going to hurt people and it's going to hurt vulnerable people. And that's the kind of story that's really going to yank on heartstrings. And unfortunately, there's no way to solve a $7 trillion problem. I'm sorry, 36 trillion. What's the debt now? 36, 37. Do I hear 38 in the back? 39 trillion from it. You get what I'm saying, right? You can't solve a problem that big without pain. You cannot kick and drug addiction without going through withdrawal. So there are going to be legit helpful programs that do good work that suffer from this. And it's going to hurt people if we're serious about cutting spending. And if we're not serious about cutting spending, it's going to hurt people even more because they're going to continue this cycle of endless financial repression and wage suppression. Ultimately, more people ending up on the government dole, making the problem worse, and hyperinflation. But yeah, there are, at the same time, when the bureaucracy gets so big, you end up with a bureaucracy like a beached whale, this big bloated thing that exists just to sustain itself, right? And we're all like, oh my God, if we cut all these government programs, think of all the government workers that'll be out of work. So what? We need to keep endlessly pumping up debt just so the government can employ people? What the hell is that? That's beached whale thinking, and that needs to end. And I'm sure that is all over these government grants. Unfortunately, we don't have the scalpel, if you will, that can very finely differentiate between the good programs that legitimately help people and do good and the bloated, wasteful programs. And I think the baby's going to get thrown out with the bathwater. The problem's just too big. There's no way out of that. Thank you very much, Steve Woitis. Appreciate the super chat, support of the channel, sir. Thank you, Jana Williams, for the super sticker. The super stickers never come up on StreamYard, but I appreciate the support of the channel anyway. Thank you, Jana. Nashville Pasta Man, what's going on, brother? He says, free AI from a hedge fund, 200 billion AI from a nonprofit. I saw that one yesterday. Who was the guy? Somebody posted that on Twitter yesterday, and I was cracking up, and I want to give the guy credit for it. I can't remember what his name was, but I did retweet it yesterday. It's in my feed if you scroll down, and man, I was running my mouth yesterday, so there's a lot of stuff in my feed yesterday. Sorry, guys. But yeah, credit to someone whose name I can't remember, some person familiar with the matter. Sorry. That is pretty ironic, right? OpenAI, the charity, charges $200 billion, not $200 billion, but they charge $200 a month for their best product. And then DeepSeek, which is backed by a Chinese government-backed hedge fund, gives it away for free. So the communist hedge fund gives it away and the charity charges $200. Some of these jokes write themselves, guys. What can I say? Thank you very much, Pasta Man, for supporting the channel, sir. Irony not lost on me. M&J, what's going on? Member for 11 months says today is a great day to subscribe, and she's throwing that Mel what's that emoji in there? Thank you very much, M&J. It is a good day to subscribe, isn't it? Hit that subscribe button. It's right down there, guys. Go ahead. It's effortless. One click, and all your wildest hopes and dreams will come true. Thank you, M&J, for supporting the channel. Nashville Pasta Man says, Kramer all over owning Bitcoin. You worried? Oh, no, the kiss of death. There we go. No, I'm not terribly worried about Bitcoin, to be honest with you. Bitcoin held up very well yesterday. Yesterday morning, I was worried about Bitcoin a lot when I saw that sell-off in the NASDAQ. But the fact that Bitcoin closed yesterday, Bitcoin never closes, but it was like around 103 yesterday. It's 102 this morning, down a little bit more. I was expecting a much bigger sell-off than we really got yesterday. And it gave me a little bit of confidence that maybe this Bitcoin bubble can at least partially outlast this AI bubble, because the crypto winter is probably about 9-10 months away, or probably 8 or 9 at this point. September, October, if you go by the calendar and the historical pattern, some big crypto fraud is going to blow up and crash crypto markets sometime around August, September, October. All right, that 18 months following a halving, it's happened 3 times now. Now, the only other thing, because of that correlation with the NASDAQ, if the AI bubble bursts, it could drag down Bitcoin early. And so I was a little worried about that happening yesterday, but Bitcoin held up very well yesterday. So no, I'm not terribly worried about it, but be aware that tech stocks do exert an influence over the price action on Bitcoin. It's not a one-for-one correlation, but it is there, and something that needs to be watched. Thank you very much, Pasta Man, for supporting the channel. Crusty White Bread, what's going on, brother? He's a melon head for 7 months, and he says AI bubble was an outlet for dollars post-ETH proof of stake. I don't know about an outlet for dollars, but I do think it was an outlet for hardware. Take company I just love to talk about, CoreWeave, right? They were Ethereum miners. That's what CoreWeave started as. They were the Atlantic Crypto, or was it Atlantic Crypto Corporation? Was what CoreWeave started as. They were a failed hedge fund that was called Hudson Ridge Asset Management, and before that, they were a failed carbon credit firm called NatSource. They got out of running carbon credits through shell companies in the Cayman Islands. Then they got into mining Ethereum, and then the Ethereum fork happened, and now you can't mine Ethereum anymore with GPUs. And they're like, well, shit, what do we do with all these GPUs that we bought? I don't know, AI? And now they're trying to IPO at $37 billion, which is definitely not going to happen after yesterday. Now, a lot of these data center companies, a lot of these, we'll say the smaller hyperscalers, I don't know, is small hyperscaler, is that an oxymoron, jumbo shrimp? The overlap with the crypto miners is pretty heavy. And you're even seeing CoreWeave cut deals with Core Scientific to share power and data center space. So there is a lot of overlap between crypto mining and AI data centers. Absolutely, positively. Good point, Crusty White Bread. Thank you, sir, for supporting the channel. And Charles G says, apparently banning DEI hires includes veterans. As a veteran, I'm fine with that. I'm fine with that. Banning DEI hires includes. I'll be honest with you guys. The DEI thing, I have no problem with diversity. I really don't. E pluribus unum. All right. It's on every dollar bill for a reason. Unity is more important than diversity, though. All right. It's okay to celebrate our differences, but if we can't function as one civilization, as one society, then we're screwed. And when people are getting beat up because their haircuts are being viewed as cultural appropriation, and how could you steal my people's haircut? Jesus, whatever happened to imitation is the highest form of flattery. People, they just took it way too freaking far. They took it way too far. And now we're more worried about what people are versus who they are and what they're capable of doing. So hiring people based on box checking was always a stupid idea. It was as stupid as not hiring people based on box checking. It's the same thing, just in the opposite direction, and it's counterproductive. I do think we need to move away from it. And by the way, I'm going to throw ESG in there while we're at it. All right. Investing, especially investing other people's money based on your ideal view of how their money should be spent is, in my opinion, unethical. You have a fiduciary duty to get them the best possible return, not to get them the best possible return while investing in companies that align with your political beliefs. So I think DEI, ESG, let's throw these acronyms in the dustbin of history and move on. That's my take on that. Thank you very much, Charles, for supporting the channel. Jana Williams, welcome to the Melonheads. Thank you so much for being a Melonhead. Thank you so much for supporting the channel. Break My Wallet Motorsports. That name gets me every time, man. After 4 months, got my tinfoil hat. Oh, it finally shipped. Wow. Well, I'm glad to hear that. Break My Wallet. Spring refunded me as well. So here's my contribution to Jack. Spring gets 2 thumbs down. Yeah, guys, you may notice the merch is no longer down there on the YouTube channel. I had to pull it. I found out late last week that it had been months. I had heard some rumblings that people were getting delays on their hats and things like that. And then, I found out that it had been like 3 or 4 months since people had placed orders and they weren't getting that. And that Spring knew about this and they were still letting people buy things and that they were still letting people pay for expedited shipping. So I'm glad you finally got your hat. I still have not got my Dirtbaggery t-shirt, and I'm hoping M&J gets her Dirtbaggery t-shirt soon. I may put the merch store back up if Spring gets their act together, but until I get positive confirmation of that, it's going to stay down. Sorry, guys. I'm not going to take people's money and not deliver products. Gee, Spring, maybe you should think about that. Just an idea. Anyways, thank you very much, Break My Wallet Motorsports, and enjoy the tinfoil hat. But a word of caution. You will be fighting the ladies off with a stick if you wear that thing in public. So be careful, sir. Citrus Squeeze, thank you for supporting the channel. He says, days like yesterday made me proud to be a melonhead. F&A, Citrus Squeeze, F&A. Look, we knew it was coming. We didn't know when. We didn't know how high it was going to go. Mania's bubbles are impossible to predict. The psychology of mobs is impossible to predict. But we know how they end, always. And so it was predictable that at some point it was going to happen. And look, there's a lot of people out there trying to say it was overblown and it's over and it was just a one and done. I'm not so sure about that, guys. And I tell you, that warning from Nassim Taleb that we could see 2 or 3 times that sell-off, a $1.5 trillion drawdown in a single stock in a day, that's some history-making shit right there. Could happen. It's the 2020s. Everybody get out your 2020s bingo cards. Thank you very much, Citrus Squeeze, for supporting the channel. And M&J says, new merch store, please. I canceled my orders, afraid I would not get them. Wanted a new tinfoil too. I will look into those options, M&J, but I can tell you Spring is the only option that allows incorporation with YouTube to actually show up in the channel. So I'm probably going to stick with no merch for the time being. Eventually, I may go that route because it's, leaving money on the table. But YouTube only allows one use of one app to actually appear below the picture. It sucks, but that's the options I'm limited to. Maybe YouTube will go partner with a different company now, somebody that actually fills orders. There's a concept. By the way, Spring, YouTube, none of them warned anybody that this was going on. They all knew this was happening. Nobody said a thing. They were happy to keep taking people's money, though. Gotta love it, man. It's the golden age of fraud. What can I say? Thank you so much, M&J, for everything you do for the channel. And thank you to all you melon heads out there for having your coffee with us this morning. I appreciate that very much. Shout out to everybody for the super chats and support of the channel. I appreciate that, as well as you magnanimous melon heads on Patreon and YouTube. You guys rock. Thank you for everything you do. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Until next time, live small and dream big.